Hi, my name is Jonathan Dixon, Vice President of International Corporate Services at OTC Markets Group. Today, I'm joined by Dr. Rory Knight, Chairman of Oxford Metrica, a research-based strategic advisor. Rory is Chairman of the Investment Committee of the US-based Templeton Foundation and was previously Dean of Oxford University's Business College. Oxford Metrica has been studying the DR markets for 2 decades. Thank you for joining us, Dr. Knight.
My pleasure, Jonathan.
Dr. Knight, from 559 unsponsored ADRs in 2008, there has been steady growth to nearly 1,400 in 2020. Why has it been this growth?
I believe that it's a surge in demand for international securities by US investors. Such was the surge that in 2008, there was a change of regulation which permitted depository banks to create trading facilities in international shares for US investors, crucially without the permission or sponsorship of the international companies. Now, that demand was driven primarily by 3 factors. The first factor was a demand for opportunities, so value opportunities in international markets by US investors. Secondly, there's a natural demand for diversification, and equally institutions have other advantages with respect to how they classify shares. However, what we observe is that you could argue that US investors could simply buy these stocks on the international markets themselves. However, the unsponsored DR program serves up a US security denominated in US dollars, trading in your local trading hours. This is an extremely attractive package. And as an institution, we have certain constraints and restrictions on the proportion of international stocks that we can hold. So being able to have them classified as US securities gives us a significant larger degree of flexibility.
All right, thank you for explaining that. Many issuers might not even know they have an unsponsored ADR. Could you please give a little background as to the difference between an unsponsored ADR, a sponsored ADR, and can you talk a little bit about how issuers can use this unsponsored ADR as part of their overall global IR strategy?
Yes, of course. The sponsored ADR program has at its center a contract between the depository bank and the internationally listed company. In terms of that contract, the company receives certain services and receives information critically about who owns their stocks, who's buying them, and who's selling them. In the case of the unsponsored, no such contract exists. So management of those is challenged in that they don't have any idea to who's buying and selling their shares, which means they are challenged with respect to how to have a complete and coherent investor strategy without knowing even who owns the shares. So one immediate step that we're seeing them take is to consider standing out from the crowd and upgrading to the OTCQX, where they would start to be able to get a much better idea, increased flow of information, etc. And they would be able to possibly upgrade without having to pay any additional burden in terms of reporting responsibilities.
Right, I see. As all unsponsored ADRs trade over the counter, can you discuss what is the benefit to an international issuer having an unsponsored ADR trading on the pink or in the grey market versus OTCQX, the highest level of the US over-the-counter market?
Yes, the benefits of upgrading to the OTCQX tier are numerous. In a recent white paper that we published, we identified 3 tangible and measurable benefits and a number of other qualitative benefits. The 3 benefits were an increase in the percentage of US ownership. Here we saw an increase where companies doubled the percentage of US shareholders in the first year of upgrading, and this was sustained over a 5-year interval. The second measure is trading volumes and liquidity in the home market. Here we observed an increase in trading in the local market of about 26%. Now, this was quite surprising, as one could have expected the volume in the local market to reduce, given that another center of trading had been established. But that wasn't the result. The result was positive, an increase in volume in the local market. The third measurable is share price performance. We measured an alpha of about 128 basis points in the year after the upgrade. And in addition to that, these are the significant, tangible and measurable benefits of upgrading. It goes beyond that. There are increases in profile, increases in reputation, much better information flow, and critically, getting further insight into who it is that owns your stock, getting a much better sense of how they are traded, which of course then feeds back into your investor relations strategy. And all of what I mentioned earlier is done without having the additional burden of further regulation and disclosure.
Right, so it's a much broader picture here. That's really interesting. Thank you. Dr. Knight, where do you see the future for unsponsored ADRs?
Well, they've been around for more than a dozen years now, and I think they are a permanent feature of the investment landscape. What we're observing, though, as a trend in dealing with a number of international companies is companies starting to get to grips with developing a more complete approach to investor relations within the framework of the unsponsored program. And typically, this is a movement towards upgrading to the OTCQX as the leading tier in the OTC markets. And I imagine that this trend will continue, and I don't see a reduction in demand from US investors for international opportunities.
Thank you very much, Dr. Knight. As Rory mentioned, Oxford Metrica have recently published a paper on this. It'll be very interesting to see how this moves going forwards. Dr. Knight, thank you very much for your time.
My pleasure, Jonathan. Thank you.